Okay, good evening, everyone. Let's see what we have here. Sydney, 2 from Sydney, 1 from Korea, Calgary. All right. Okay. Last night's sunset was absolutely incredible because of the cloud cover. So you see that big cloud the sun is kind of hiding behind right now. That's going to light up nice and orange from the bottom. Last night was absolutely incredible. Let me see if I can find a picture from last night. I took a picture. It was unbelievable. Let's see if I got one here. Okay. Let's see if I can show you that one there. That was last night. Look at that. It looks like a fire on the horizon, doesn't it? It's just absolutely incredible. So hopefully tonight will be just as good. Okay, what do we got? India, Ohio. I used to live in Ohio, lived in Cleveland. Italy, Montreal, Morocco, Newfoundland, Belgium. Natural gas futures contract in India selling in April, 155, May 177. Is it possible arbitrage? Probably not. It's in contango. The May price is above the April price. If the 30-day interest rate, the interbank rate in India is 8%, 9%, and the cost of storage is, not meaningless, then yeah, that would be the futures price quite easily. New York, Vancouver, California, Kuwait, right next to you in Panama, with a lot more humidity than I have, I'm sure. When you say they need to drop rates so debt does not inflate, what about printing money to pay debt? Or is printing only done if rates are close to zero? So that's monetizing the debt, which is a form of what the central bank does when it's buying U.S. Treasuries. So in 2020, it bought Treasuries aggressively, and the Treasury printed a whole bunch of debt to finance the spending bills that Congress approved. That is monetizing the debt. It's meant to be a short-term thing that the central bank now is canceling the money that it created by letting the treasuries roll off and not rebuying them. So there is no concept of cash on the treasury balance sheet. There's just a cancellation of the amount of money that was outstanding, and just a decrease in M2. You can print money only so far before it really starts to become part of the problem and not a solution to the problem. You can get away with it for a while, but if your strategy is we'll just keep printing money, the end game to that is disaster. It always has been disaster. Massachusetts. Why is shelter price levels watched by the Fed and its significance in CPI? I'm trying to understand what exactly is shelter measuring. Shelter is measuring, the cost of shelter, right? So it's because housing is so big, it's really considered an investment. It's not really considered consumer spending because nobody really buys a house on day one. Most people have savings, and they use that savings as a down payment. And then they borrow money. Well, money is not borrowed. Money is not income. You don't claim that on your income tax. So you have to find a different way to account for house sales in CPI. So the easiest way to get it done is to assume that there is an investment going on, that somebody buys a house, which goes on their balance sheet as an investment, and on their expense column, they're basically paying rent to themselves. And it's usually the rent is usually a function of, the value of property over time and the level of interest rates. But it's the easiest way to account for the increase in the price of housing. So let me give you an example where housing prices could go up, but if you used housing sales, you would find deflation in housing. The price per square foot to build a house in the US, I think a normal house, a builder house, is somewhere around $250 to $300 per square foot, probably closer to the three. If you're building a nice house with, nice floors, nice bathrooms, nice kitchens, you may be up to $500 a square foot. But let's say it's $300 a square foot. And people are building an average of 3,000 square foot houses, so $900,000 houses. Financing costs shoot way up, and everybody decides that instead of building 3,000 square foot houses, they'll build 2,000 square foot houses, and the average price is now 600,000. Well, that's a 33% reduction in the house price if you used new housing prices, because you'd have to control for the price per square foot. But if you control for the price per square foot, how do you control for, granite countertops versus, wood countertops versus laminate countertop? How would you control for all of the little features inside the house per square foot? The easiest way to get that done is just to say, well, if you had to rent your house to yourself, it's going to be a function of the value of the house. What would the rent on the house be? And this way here, you can control for quality because you can ask the same house over a period of time. Well, that controls for everything, right? If you're looking at the same units over a period of time. So it's easier to count that. It's much easier just to count that. So that's basically what is done. Okay, I've completed 5 topics of CFA Level 2. Should I go for August? I really want to keep the Sunday nights about the market and the Tuesday nights about CFA, but I'll answer this one because I've read it. Sure. If you're 5 of the 10 and it's only April, you have time for August, sure. Can you do a brief overview of data centers industry? Key risks. Well, the biggest risk in the data center industry right now is overbuilding. And there will be overbuilding. Why wouldn't there be overbuilding? And let's say that a lot of this AI hype just doesn't follow through. It's a lot of companies are saying, we got to get in on this, we got to get in on this. And after a year or 2 years of it, kind of like, full self-driving, you see companies sort of saying, we're chasing maybe a dream, it's not ready. Maybe this whole AI thing is just, in a couple of years, we say, okay, it's really just regression, isn't it? I mean, it's really just predictive regression. The generative stuff really, with the hallucination and the linearities, it's really not there. Then you're going to have this big glut in data centers. And there's going to be overbuilding. There's always overbuilding. There will be overbuilding in this like in anything else. That's the biggest threat, that if you have a data center now, the future looks nice for that data center, but you got to keep your eye on the amount of new centers that are coming online. Didn't Microsoft announce $100 billion into data centers that they're building? I don't know if it's one big, massive data center they're building, but they kind of want to own that space. That's another risk as well, right? I mean, if you want internet service or a hosting site, it's pretty much Google, Microsoft, Azure, and Amazon. Gone are the days where you would call a local place that had a bunch of servers and you'd rent a server. I mean, who does that anymore, right? That's the big threat, is that the big ones take it over, and they have R&D that allows them to scale much better than a normal data center would. So you will have overbuilding, and you will have the big guys saying, we want to own all of this space. I think that's the big risk there. But right now, You can tell almost any story you want about AI. You could say we are at the next industrial revolution, this AI revolution. This is the beginning of this. This is a 20-year, 30-year, 40-year build out like the internet was. The internet, you could see the value right away, and it worked pretty much right away. Once the browser came in, that was it. You know, pedal to the metal. You know, off we go. But this AI, I don't know. It's I think the promises and the hype are way ahead of itself. I think robots in the house are 30 years away. 30 years away. A general purpose robot, 30 years away. We already have robots in the house. I mean, robots are everywhere in your house. Just walk around. Your dishwasher, that's a robot. All you got to do is give it the dishes and it'll take care of it. Your washing machine is a robot. You throw the clothes in, it does a few little spins, it senses how much clothes is in there, it adjusts the water for it, off you go. Same with your dryer, that's a robot. It's just they're specific purpose robots. We've had robots in the house for years, for decades. But a general purpose robot, no, 30 years away at least. There'll be strides made along the way and there'll be some impressive things done, but you're 30 years away. I think true AI is probably, well, to get it better than it is today, I think at least a decade. And much of the hope, I think, will fade away. And we'll find that it's very good in very specific things, that you can get very good with very specific things. But I think the problem comes with the data, right? If you want robots to be better than humans, you have to give it more than just human data. You have to give it perfect data. Well, find me perfect data. Find me any perfect data, right? You're going to have a machine that relies on the data that it has. Will never have experience, will never have intuition. So I think a lot of the hype I think it's really overdone. Let's see. What determines how fast futures price changes at different months? Well, it's mathematical. It's very, very mathematical. It's interest rates, period, from today to the contract, to the end of the contract term. It's whatever interbank rate there happens to be. And then it is a forecasting of the costs and benefits of owning the underlying. So how much is storage going to cost? Does the underlying pay any income over a period of time? So financial assets usually have a source of income coming in. Real assets have a cost to store, like you got to store oil somewhere, right? So all futures prices are based on a no arbitrage condition, meaning that there should be no arbitrage opportunities, because if there are, somebody will take advantage of it until there are none. So we price futures out based on no arbitrage, which means let's borrow some money, let's buy the underlying, let's store it somewhere, and then we'll pay back the loan in the future. The value of the loan you got to pay back, along with all the expenses you got to pay to store it, is the futures price. So why would there be a difference from month to month? Perhaps there could be a difference in supply. This is very common with agriculture, where you're at the end of last year's supply, but you haven't hit this year's harvest yet. So you'd see futures prices probably decreasing into the final month, because storage, there'd be lots of room in storage. And with lots of room in storage cost would be very cheap. So remember, a futures price here is not sentiment. We're not trying to estimate what the market thinks the price will be in September when we're in April. The futures price is based on, I'm going to borrow some money today. I'm going to go buy that underlying. I'm going to go buy some wheat. Then I'm going to pay to store it somewhere. The more full the storage facilities are, the higher it'll cost you to store it. And then at the end of the period of time, I'm going to pay back the loan. That will be the futures price. Nowhere in there does it say I'm going to sell the wheat. It just says I'm going to pay back the loan. Hopefully you can sell the wheat for more than what it costs you to borrow the money and store it. But borrowing the money and storing it is your futures price. So it is going to be affected by interest rates over that period of time, interbank rates, not treasury rates, interbank rates, and it's going to be affected by storage costs over that period of time. What is better for shareholder return, growth in EPS or ROE? Well, it's the same thing, is it not? Earnings per share is after debt holders have received their interest, because you have EBIT, which is earnings before interest and taxes. You take off interest, the debt holders are good. Then you have EBT, which is earnings before taxes. You take off taxes, the government's good. And then you have EPS, which belongs entirely to the shareholders. So the EPS sets up the ROE. So they are the same thing. Growth in EPS or ROE, I think they're the same thing. What are your thoughts on the Zimbabwe new gold-backed currency? It's not entirely gold. It's gold in US dollars, but it's a small currency. It's small. They got to do something, right? They had to do something to control the ridiculousness of the money that they had to print in the denominations. So the goal of it is to restore confidence in a denomination. And if it is gold-backed or US dollar-backed, well, then that's not so bad. Do they have the exports to bring in the US dollars? I mean, that'll be the question, right? Do they have the exports to bring in the US dollars? Because they're not using their currency to buy gold. Do they have, and I don't know, do they have domestic production of gold where the state owns the gold? And they just have to get it out of the ground. They can build their gold reserves, which builds their currency. I don't know. So, but they have to do something to regain confidence. This is a step. Whether or not they can maintain it, well, I don't know. When you say U.S. will cut the rate in last. First Canada cuts rates, the money will flow to U.S. investments. Higher rates, no? Well, if we think about efficiency, global efficiency, and perfect mobility of capital, without any bias, then yes, money would flow to where it would get the highest return. Right now, that is still the U.S. However, you have strong home country bias. You have some money that will not leave Canada. You have a lot of money that will not take on currency risk. As soon as your money leaves Canada and enters the U.S. and buys U.S. T-bills, you have U.S. dollar, Canadian dollar currency risk. So you have a lot of corporations that are sitting on cash and cash equivalents. Those are money market securities that won't sit on U.S. securities because it introduces currency risk onto their balance sheet. So in an economics textbook with capital perfect mobility and hedging instruments, you would have that. In the real world, there are all sorts of constraints that make that unlikely. The average person is not likely to hold U.S. T-bills. They're likely to stay in domestic holdings. The home country bias exists for a particular reason. If money is in the U.S., there is a 30% withholding on the interest. So suddenly, that's not such a great deal if you have a 30% withholding. So there's economics, which is very normative, and then there's the real world, which is full of biases. Some biases are there for good reasons. The taxation, the different taxation from Canada of U.S. interest versus Canadian interest, the currency risk that we would have to take on. We buy T-bills at 135, the Canadian goes to 130, we lose money. You lose money along with the 30% withholding on any interest that you would have received during that period of time as well. So it's not as simple as the textbooks make it out to be. Would it be possible to add data center as a sector study in the applied series? I believe I have. I believe in understanding REITs. I believe there was something on data centers in there. How to approach the analysis? How much? It is a REIT, like any other REIT. So valuing REITs is pretty straightforward, regardless of the REIT that you're trying to value. It's pretty straightforward. As far as the prospects for a REIT, keep in mind the REIT owns the data center. It does not run the data center. Much like a REIT would own hospitals, but it does not run hospitals. So you'd still have somebody in there running the data center. The REIT is holding the data center. These would be considered industrial REITs, or within the category of industrial REITs. Yes. Now some, I'm not sure if some do. At least not in Canada. I haven't really looked at the US ones too much. Digital Realty, I used to follow. Lots of debt, but I really didn't do any deep dives on that one. I don't know that you would need to go much beyond analyzing what a REIT does, right? For new money, should we invest in housing or the equity market? That's a good question. When you say housing, I don't know what you mean by housing in Canada. I don't know too many ways to invest in housing in Canada other than through residential REITs, multifamily residential REITs, or basically apartment REITs, of which I'm a big fan of, given the structure of the Canadian market in terms of housing availability and population growth. I don't know why anybody would not want to be in apartment REITs. Let's say interest rates drop. Let's say activity picks up in the housing market and more people move out of their apartment into houses. There still is a shortage of housing. That is bullish for Canadian apartment REITs, and I'll tell you why. If at the end of the year you stay in your apartment, I am limited on how much extra rent I can charge you the next year. I can only increase my rent a small amount. But if you move out and I put somebody in there, I can raise my rents to market rent. So the turnover in an apartment building on average is about 30% a year. That sounds like a lot, eh? But take a 100-unit apartment building. Every month it'd be 2, maybe 3 apartments turning over. So let's say there's 2 apartments turning over. That's 24 apartments a year. There's 24% turnover. So you got about 30%. With housing prices this high and interest rates this high, the turnover in apartment REITs is more around 7%. Very low turnover, which is keeping the ability to raise rents down, and they're still doing well. So if there was a way to get them to move out at a 30% rate instead of a 7% rate, market rents would adjust very quickly, and the REIT would do even better. And we have a structural shortage of housing for a long period of time. So if housing doesn't become more affordable, where are they going to go? If housing becomes affordable, great, get out. We got a big lineup of people who want to get in, and they'll get in at a higher rent. Heads I win, tails I win. I don't know why I wouldn't be in Canadian apartment REITs at this point, and I'm looking to add significantly to my apartment REIT holdings. Do you think oil going up will pause or change Fed's view of interest rate cuts? Depends on how Israel-Iran plays out. That's some kind of tension going on there, right? It depends on how that plays out. You have Israel, which just does not want to calm things down, even with the U.S. saying, "Look, man, continued support's going to start to hinge on this. You gotta back off a bit." And them basically saying no. More and more countries are sort of backing away from that, saying, "Hey, come on, man, you got to settle this down a bit." And to bomb their embassy, Iran's embassy in Syria. I mean, I think that while they're throwing bombs around, why not? You know, they want to crush Hamas. The thinking might be, why not? Why not get rid of everybody in this region that doesn't like us? Why not just get rid of everybody right now? While we're in it, while we're walking through blood, let's get rid of it. What is that line from Shakespeare? Having walked through blood so far would be just as tedious to turn back as to go forward. Or being so steeped in blood, it would be just as tedious to turn back as go forward. Something like that. If anyone knows that line from, I think it's Macbeth. If anyone knows that line from Macbeth. Doing a short strangle on FCX for income and paper portfolio. But I just rewatched short strangle options video, and you say mainly do these on ETFs. Should I avoid? I think so. On FCX, I think so. FCX has two things going for it now. It has copper above $4. In the 420 region. If you see copper drop below 390, then yeah, selling calls. And if you think it's going to stay under 390 for a while, selling calls on FCX makes sense. But it has gold prices going up, which means its copper price is getting cheaper and cheaper out of Indonesia. It's already free. They have a negative cost on copper. So what that means is after they mine for copper, they get gold. They have no choice. Gold just shows up. After they separate the metals from the ore, they sell off the gold. They make so much money selling the gold, it pays all the cost of mining and then some, meaning all that copper that they're there for is free. They're already making money before they even sell the copper. So the higher gold prices go, the more profitable Indonesia becomes. And if copper prices stay at these levels, you've got two things going for FCX. Number one is their their revenue per pound, or their net income per pound, I should say, will be higher. And at a higher price, it increases their reserves. Some of those resources now become reserves because they become economically feasible, which raises their net asset value per share. So I would not do a straddle on FCX unless you're thinking of lightening up. So that was sort of the way I was thinking, was why not sell a $47 or a $50 call and lighten up a bit? It was a good return. But I don't know that I would do it as an income play. If you have underlying, let's say you have 3,000 shares, it's gone up to $50, and you think, now's a nice time to take 500 shares off the table, then sell a $50 call. Go ahead and sell a $50 call. You'll get some extra income out of that. And you'll be selling your shares at a slightly higher price. And if you don't have them called away, you made income. But naked, I wouldn't do it. Context is constructing spot curves from par. Now, if a one-year bond is semi-annual coupon paying, is the one-year par rate still going to be the same as the spot rate? Well, first of all, for a one-year bond to be coupon paying, it had to be at least a 2-year bond when it was originally issued. One-year securities are money market securities. They're issued at a discount. They mature at par. They don't have a coupon. So if it is a one-year bond, it basically is two things. It's a coupon. Its coupon is a 6-month. You can think about it as a 6-month strip, which you could call it a zero coupon if you want. And the principal and par is another zero coupon. You would need the 6-month and the 1-year spot rate to be able to price out that 1-year bond, not just the one year spot rate. But the 1-year par, the par rates given on the Treasury are broken down in the money market and capital market. The 1 year would be just a discount. Any thoughts on platinum and palladium versus gold? Not really. They have more industrial uses. The biggest use for gold, by the way, the biggest use is jewelry. And it's got an industrial use, but it's small. The biggest use is jewelry. Why isn't the world buying more from Japan despite the yen's 50% undervaluation, according to PPP, aside from tariffs? This could reduce costs for other countries and increase Japan's inflation. Well, they sell what they can. All right. It's not a low-cost production country. It is a fairly high-cost production country, but they sell what they can. I mean, they do export. That is the source of a lot of their GDP is their exports. Yeah, I mean, they already do that. I don't know that it helps in the US if you buy a Honda, because the Honda is made in the US. Look at that beautiful sky. Whenever there's cloud cover, the sun hits the bottom of those clouds and it just lights up. That is a nice look. Let's see. 2 questions. How do you feel about U.S. healthcare REITs with the aging U.S. population? Don't like them. Do you follow a pre-existing workout routine or just a custom program? Lately, I haven't been doing anything. Number one, why don't I like healthcare REITs? Because they don't run the healthcare unit inside the building. They basically own the building. And so they are exposed to the credit worthiness of the operator. Well, the operator can't staff up. So that means that they cannot operate at full capacity. They can't have all the operating rooms running. They can't have all the services that they would normally have because they can't staff up, which constrains their cash flow. So it's the credit worthiness of the tenant that is the concern. Thoughts on Middle East conflict? Well, what do you want me to say there? You could have asked me that same question when I was 5 and 10 and 15 and 20 and 25 and 30 and 35 and on and on and on. And thoughts on Middle East conflict? What's new? I mean, what's new? It's been going on for as long as I can remember. It's been going on, leader after leader, generation after generation. Here we are. It's still going on. So, I don't know what to say about that other than it's not abnormal, which is unfortunate, but it's not abnormal. I did a blunder. I invested in a prep provider's course and now I don't understand anything and they are not willing to give me a refund. Well, let's unpack that, right? And when you say you don't understand anything, is it the prep provider's fault or is it your fault, right? Are you watching whatever video they have and saying, well, it should just transport it to my brain and I should walk away from the video just knowing it, but I don't. If you're not putting in enough of the work on your own. Let me explain with an analogy. There are times in university where a professor is so bad they have to be removed because they're just not helping at all. They're making it worse. I remember one who was teaching something it was a database course, was so bad they got pulled after about 3 weeks. They got pulled and replaced. On the other side, I can't tell you how many C students and D students blame their performance on the professor. Oh, I failed because of the professor. So 29 people passed because of the professor, but you didn't, but it was the professor's fault. Right. And they will tell you that they had 4 or 5 courses like that where they failed because of the professor. Professor didn't like me. So when you say you're not understanding anything at all, is it because of you or is it because of them? Now, that's hard to ask you because right away you'll say, well, it's because of them. But think about it carefully. it's hard to answer a question like that straight up. You say that you don't understand a word they're saying. Not a word they're saying? Are you sure? Not a single word? You know, so I'd probably have to ask a lot more clarifying questions than that. As far as not giving a refund, that is quite common when there's video involved, because there's all sorts of ways to pull video off the internet. So you pay, you get access to the video, you pull them all off, and then you say, oh, this is not working for me, can I get a refund? Meanwhile, you fully plan to continue to use the videos, you just don't want to pay for it. So I'd have a whole bunch of questions to ask on top of that, especially with a YouTube name that's not really a name, right? Do you think all the illegal immigration in the U.S. over the past few years contributed to inflation? No. It was a very simple thing. It was the economy, the global economy shut down, and supply channels were offline. You couldn't get stuff, period. You just couldn't get stuff. So no, I don't think it was immigration. Explain how we assess potential credit exposure for an interest rate swap and cross-currency swap. Well, your credit exposure is your counterparty, right? I understand it won't be the same as the notional value for the trade. Oh, your credit exposure. Well, your credit exposure, if it's just an interest rate swap, you've traded nothing up front. You're just agreeing to exchange the net. So if it's fixed for floating, yeah, you're not going to really know what the floating rate is at any point in time, but your exposure is only the interest, the net interest between the two rates at any coupon payment date, because an interest rate swap, you're not actually trading any notionals. For a currency swap, you are trading notionals. And then you get them back at the end. So you still have the same thing. You have an interest rate swap on that, and then you might not get your currency back. So, but you've got to forecast at any point in time in the future. You really don't know what what the exchange rate will be. So you sort of have to model out what your credit exposure would be. But if your dealer is the counterparty, which they usually are, and if your dealer is, one of the more well-known banks, I mean, really, I don't know that there's much of an exercise to go through in credit exposure when counterparty risk is extremely low. When will we see pension funds immunize against rising rates by selling equities and buying bonds? Against rising rates? You mean falling rates? Considering forecasts of the U.S. remaining between 4 and 4.5 for years. Well, if it's going to stay between 4 and 4.5, what are you immunizing? I mean, it's hard to immunize a constant, right? You immunize changes. If you expect it to stay in a range for a period of time, what do I have to immunize? And as far as when will we see pension funds immunize, many of them are already doing it. A lot of immunization happens through derivatives, not necessarily through bonds. They'll mean variance optimize their portfolio and then close any basis point gap with contracts. What order do you recommend we go through for the sector studies? You can go through any order. There is no particular order for them. But if I had to pick one, I'd say sector studies would probably be the best place to start. If the U.S. government significantly increases its issuance of bonds, doubling the current amount, yields could rise to 10% or even 15%. What would be the impact on the markets and the dollar? Well, it's not so much the destination of anything that matters. It's the pathway in getting there that matters. If you think that yields could rise to 10 or 15%, and that we could see those rates, that means the market's absorbed it. Otherwise, you wouldn't see those rates. If the market can't absorb it and the market breaks down at 8 and the economy breaks apart at 8, the Fed will buy up bonds and rush to lower interest rates to 0. So if you say, well, let's say interest rates are 10% in the market, what's the effect? Probably nothing, because if you can see 10% interest rates in the market, that means the market's absorbed it. The Fed didn't have to step in. So I don't know that it's much of an exercise to go through when you consider that if it exists, then there is no problem. It is when there is a problem, right? If we can get to 15% and we see 15%, we know the economy can handle more. Plain and simple. So, why have you never run a hedge fund? Why would I want to? I'm not interested in that. Retail client tax deferred account that holds what I consider the best 15 aristocrat US stocks to generate income. What is the argument for holding SPY LTL mix? You mean you want me to talk you out of the 15 stocks? I don't know enough about you. I don't know how old you are. I don't know what your time horizon is. I don't know what these 15 names are. I don't know what other assets you have, what your level of income is, what other, well, I guess the end result is I know nothing about you. There's no way that I could come up with an argument of why you should be in something else. If I knew something about you, I could then, and I knew more about the situation, I could then say, wow, here's some things we should think about. But I know nothing about you. Right? So people who can give advice to strangers without knowing anything about them are just making things up. There's no way I could ever advise you on anything without knowing a whole bunch of stuff about you, because I may be talking you into something completely unsuitable, or you could be in something right now that is completely unsuitable. I wouldn't know. These are not phone-in questions. These are long interview questions where, I'd have to get to know a lot about your personal situation, your financial situation, your goals in life, to be even to even be in a position to start thinking about what would be appropriate for you. So I just don't have an answer for you on that one. I want to get the applied series after level 3 examiners. Is it better to buy it while I'm signed up for level 3? If you get it while you have an active subscription, it's $320. If you no longer have an active subscription, after you finish level 3, you no longer have an active level 3 subscription, it would be $440. So you do save $120 by buying it with an active subscription. It is priced that way on purpose. Continued from above, asset allocation across 9 sectors, rebalance every 6 months. U.S. resident, no expectation Medicare to exist, and expect an annual growing income. Can sell positions for major medical issues. Okay, it still doesn't get me anywhere near where I'd need to be. What will the interest rate decrease do for Canadian banks, given a large amount of mortgages are coming up for renewal? Fewer loan loss provisions, lower delinquency rate. It will only be better for Canadian banks. Are you bullish or bearish right now on S&P? Neutral to slightly bearish, but I'm not going to express any of that in any kind of trade at all. this market just seems to have one direction. And as long as the AI hype is alive, I'm not shorting this market at all. I'm not expressing my bearish views. Instead, there are stocks that I don't mind owning at all. Stocks that have a good income stream and a duration component. Agency, I'll hold on to it. It pays me a dividend. And when rates go down, that's going to be a beneficiary. Because as they buy, as they receive their interest, their principal and their prepayments on these mortgages, they're buying new ones at higher rates. So they're going to have a really nice effect when interest rates drop. ABR pays me to wait. I'll continue to wait on stuff like that. So I'll continue to invest in long-term stories. Canadian REITs, I think, are a great long-term story. I'm not going to express a view on beta at this point. I do have money that is long because I have funds. I have managed money and discretionary money. The managed money, I stay out of the way because it's not mine anyways. Well, I mean, it's mine, but I don't need it. It's not going to be mine. It's going to be donated at some future point in time. So it has a long investment horizon. So I don't really care about it. Let it grow. I mean, the path may be ugly, but oh well. One more question. I come to the conclusion that just to follow the EMA 100 and WMA 220 on daily chart when EMA 100. Okay. I'm not going to comment on that. You're drawing lines on charts and looking for stuff there. If that works for you, that works for you. That's fine. But I'm out. I believe price shows the end opinion, so I just fall. Oh, okay. I cannot recall L2 content, even though I covered the curriculum. Please help. Reviewing is faster than learning. If you've already covered it, means when you go to review it, you'll pick it up and you'll remember it faster. But you do have to review, a regular review. Maybe you left that out. Many were drawn. Okay. Do you mind elaborating on why you think Canadian REITs will perform well in the future? I don't know how much more to elaborate on this. I've been saying it for over a year now. Population growth and where are they going to go? That's really just it. Where are you going to go? You come into Canada, so are a lot of people. Where are you going to go? There's no housing. Where are you going to go? You got to live somewhere. That's it. That's it. What are the effects of interest rates on REITs? The REITs have duration, so they act like bonds. The value of the REIT will go up as interest rates go down. Cap REIT or Boardwalk? Cap REIT. Just cleared level 1. Want to decide on a finance MSC, which is a lucrative major. For my current unit, I have the choice of corporate asset management. Banking regular. Oh, neither one of those are good choices, right? Oh, hang on. Corporate, asset management and banking. Do you mean or banking regulation? Or is it corporate or asset management and banking regulation? I think you mean three things. I'd probably think, I would pick asset management, but I'm not you. Well, what do you like? It's not a matter of, where should you be? It's what do you like? Is the U.S. Fed and Treasury depending on the idea that AI is substantially disinflationary? Well, who cares what the Treasury thinks, right? I mean, all the Treasury is doing is managing enough money to fund the government. So who cares what the Treasury thinks? The Fed, I don't know if they're depending on it. No, I don't know that they're depending on it to be substantially disinflationary. have you studied or seen the appreciation? Oh, no kidding, over the last 3 years. I was just having a conversation with somebody about this, a level 3 candidate, about this yesterday. Bumped into him at the supermarket. And it was, like or was it, no, sorry, it wasn't him. It was somebody else who's into crypto, talking about the currency and saying, this is, what's the thought on this? Why, we're 495, 490, under 500. When I was here in September, it was 541. So everything has, gotten 10% more expensive since I've been here. You are truly in a third world country with New York prices. Some things higher than New York prices. You can probably live cheaper in New York City than you can in Costa Rica for a third world country. What's going on? And I think there is some thinking of it's the need for US dollars to pay back external debt. So if you can drive up the price of the colony, you need fewer of your own local currencies to buy US dollars to satisfy the external debt. But at the same time, that's killing imports. And a lot of stuff is imported, and you may think, well, but that's good, right? 30% duties minimum on the imported stuff. That's a huge amount of tax revenue that's disappearing. It is becoming a very expensive country for tourism when you're not getting 600 colones per US dollar, but only 490. Suddenly, the vacation here is 20% more expensive than it normally would be. So I just don't think it is the right path for a country, a small country, without much of a production base like Costa Rica. They depend on customs duties and tourism for the vast majority of their revenues. And they are slowly crushing both of them. I think it's unsustainable. Where's it going to go? 480, 470? You get to about 450, you're going to start to crush a lot of households in Costa Rica where the income is in US dollars, but their expenses are in colones, which means you're going to see some staff being laid off that work in these houses, because suddenly they're becoming just as expensive as living in the US. And if that's the case, well, I'm living here for a reason. If you're going to make it more expensive to live here than to live in New York City, I'll go somewhere else. I'll leave, and so will all my spending, and so will the two people I employ. They'll have to find something else. So this is not a good path for a country like this. It's unjustified. On what? The strength of pineapple exporting? I know they export a lot of pineapples, but come on. I don't know if anyone from the Costa Rican Central Bank would be listening, but I would strongly advise to head the other way. At least back to 550, if not 6, if not 7, if not 8. I mean, if you really want to increase the revenue in this country, you need to lower the currency, not increase the currency. So I have been following it because I got to keep exchanging US dollars for colones, and I do it 5,000 at a time, and I keep getting less and less and less. And, you go shopping and it's like, you got to be kidding me. You're paying the equivalent of, sometimes $50, because I translate it into Canadian in my head, paying the equivalent of $50 for something in Canada I can buy for like $18. I'm paying the equivalent of $50 down here, almost triple the price. It has to stop at some point. Or, I'll go somewhere else. I'll hand this over to a property management company and I'll just leave. But yeah, it is a problem. What are your views about AMD and NVIDIA? Don't know that I have any very particular views about either of them. How would a natural disaster in Japan affect the Japanese yen, as it is a safe haven? I don't know so much that it continues to be a safe haven regionally as it used to be. I don't know. tell me what kind of natural disaster it is, and maybe I'll have some opinion on it. Gotta subtitle English in your videos in your website. Well, they're not my videos. They're Sarafai's videos, and I think we looked at, or they looked at subtitles before, but it's not perfect, and it would end up overlaying on top of the video. And as you know, on the video we write on the screen, so it would cover most of the writing on the screen. Do you think the Fed will cut this year? Yes, I do. I would like to say that I was happier with your comment on LinkedIn. Happier with your comment on LinkedIn. Okay, I get it. Than passing my level 1. I watch my feed and I try to comment on everyone who thanks me. And I type it in myself, even though it's the same comment. I do type it in myself. I do read everybody's post, and I do type it in myself. Do you think AI will raise the R star due to increased productivity? Okay, well, let's put this in context. This increased productivity. When you increase productivity, you lower unit costs. Period. You lower unit costs. That's deflationary. Technology is deflationary, not inflationary. So anything that can wholesale increase productivity will lower unit costs. If you have a healthy competitive environment, that means more competition will come in that will compete on price, and price will go down. That has been the history of technology from as far back as you can think. When it doesn't happen, it's usually because you have a monopoly or some type of quasi-monopoly sitting somewhere that is not allowing competition to come in. So for the most part, in the US, especially in the US, because there's so much capital, technology is deflationary. So if you do have a productivity boom because of AI, you will have pressure on pricing to the downside. That doesn't mean pressure on margins. It just means negative unit labor costs or very low unit labor costs. Let's see. What is your opinion on the longevity of Canada's OAS plan? Well, it is income tested. The old age supplement is income tested. I personally don't see it going away. I think, when we say certain things there won't be money for certain things by 2035, 2040, yes, there will, because governments will just run deficits. Because it's short-term thinking. That is what democracy does. Democracy puts in place short-term thinking among politicians, because you just got to make it long enough to get your pension. What is it, 5 years, 7 years, and you got your pension in in politics? And you want to get elected for the next cycle. That comes with a populist approach of giving stuff away. And if the money isn't there from tax revenues, you print debt. That is the end game of democracy. Unless somebody somewhere comes in and fixes that, and it's a heavy dose of medicine that the population has to take, it's never going to be fixed until it has no choice but to be fixed. My vote is it will have no choice but to be fixed when everything breaks. No one's going to stop. No one's going to stop. So it'll continue on until not until governments stop it. Governments won't stop it. It's until there is nothing left to do but cancel it, because there is no other solution. And that's certainly not a place that I want to be, because the governments will go after wealth aggressively before they let that happen. They will go after wealth aggressively. I wouldn't be surprised if sometime in the next 10 years you see a wealth tax on inheritance, that the tax will be 50% on inheritance up to 5 million, then 100% on everything above that. which means the most you can inherit is 2.5 million. It wouldn't surprise me one bit if we move to a really, really aggressive inheritance tax above some number that some average person deems is good enough for them, so it should be good enough for you, right? Wouldn't surprise me one bit. So aggressive things like that will be done before the system caves in on itself and implodes. But you're simply not going to run out of money by 2032 and then tell the population, oops, we're out of money. You'll simply just run deficits while you give OAS an increase in income and pay them more. And just run deficits and then go after wealth aggressively. That's the end game. That's democracy. That's what happens when you let everybody have one vote. I don't think votes should work that way. I think they should be weighted. If you have, if you haven't graduated high school, you get no vote. Sorry, but you're just not educated enough to vote. If you graduate high school, you get a vote. If you graduate college, you get another vote. If you graduate grad school, you get yet another vote. And you build votes. If you employ at least 5 people or more, you get another vote. If you donate to charity at least 5% of your income, you get another vote. So suddenly, somebody like me would have 23 votes. Why? Because I'm valuable to the economy. I've done the right things. I've stayed in school. I've employed people. I donate to charity. Do you not want somebody like me making better decisions? Or at least influencing decisions, right? So I think democracy, this one person, one vote thing is broken, significantly broken. And I think that our votes should be based on our merit. Do you own a home? You get another vote. Simple as that. Do you have a bad credit score or a good credit score? A good credit score over a certain number, you get another vote. So that when I go to the voting booth, they know that I have 23 votes or 28 votes. I think that is a much more, representative way of getting government. Much more representative. I'm still watching a weekly outlook. Sorry if this was mentioned, but do you think TLT 93 put these still in place? I do. I recommended the 93s and 94s for May. Any catalyst that can cause it to drop further below 90. CPI this week. Well, you have Cash Carry on Monday, opening his big mouth. Then you have Bowman on Wednesday, opening her big mouth. So you got to be careful about what comes out of them, because Thursday and Friday, they didn't say good things. Then you have CPI on Wednesday. All right, so as long as the central bankers can keep their big fat mouths shut when it comes to, we think maybe, could be, but not our base case, more rate hikes this year. Come on, keep that to yourself. What do you think about BRICS? Will they be able to replace U.S. as global currency? Probably not. Probably not. In news, India is prohibiting U.S. derivatives unless required for business hedge. What do you think they are thinking? I don't know. I don't know enough about that. That's the first I'm reading of that. Should Japan have raised interest rates when inflation exceeded 4% instead of at 2.8? What are the benefits of quicker hikes? I don't know. I don't know. I think Japan is in a very tough situation. I think they can't raise rates. Moving it out of negative territory is probably beneficial for maybe keeping money in the banking system and money in the country, but I don't think they're in a position to really raise rates given the level of debt that they have. Implied series, will you be adding more videos? Yes, I will. What would you recommend if I want to see how quants are applied in practice? Oh, as a retail, it's a lot of work for very small output, and you're not going to have the capital to get it done. You're simply not going to have the capital to put most of those trades into place. at all. I don't see the value in it. What are your thoughts on when people say State Street, Vanguard, BlackRock control the entire stock? They don't control the entire stock market. They hold a lot because of passive investing. Investors at large control the stock market. If you have shares of an ETF that are owned by and BlackRock is the sponsor, you're the owner of those shares. If you sell those shares, well, you control what happens. You don't have to sell them. You don't have to buy them. So they don't control the entire stock market. They hold a lot of the stock market in your name. That's really all they're doing, right? It's the rise of passive investing that has created that. Has Beyond Meat found a bottom at 740? No, I think 0 is the right number for Beyond Meat. Is the Manpower Group earnings on your horizon? Not really. Not really. Have you ever used any of W.D. Gann's trading technique? No, 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 no. In today's market outlook, you mentioned purchasing CAR. I'm curious what you typically do with your CAD cash when it's not actively invested. The purchases I did were in my TFSA, my RSP, and my Lira, because I had moved some amounts to cash, and I thought that there was a need for me to close them down when I left Canada, but my accounting firm, who's helping me divorce Canada, says those you don't have to close. You can't contribute to them anymore, but you don't have to close them out. You don't have to close them down. So, that's pretty good. All right, I'm going to end our stream here. We're coming up on 6:30. Let me answer 2 more. Do you believe short-term FX exchange rates follow a random walk? Pretty much. Or can they be modeled with good success in the short term? Not really. I'm finding it difficult to predict short-term FX movements because they're mostly unpredictable. So yeah, that is the general consensus after years and years of research into this, is that in the short term, it's really just a random walk. By the way, did you get any CARUN shares? Yep, I got 10,100. I averaged in starting at 46, spent all my capital already at 45. Well, that's good. That's a good price, I think, for this stock. As soon as Bank of Canada starts dropping rates, you're going to get a bid on these companies, and up they go. I'm not concerned about holding apartment REITs on a long-term basis. I still want to buy more. I have still some Canadian dollars I haven't exchanged. The question I had with JP Morgan is, can I hold Canadian stocks in my discretionary account? I don't have an answer on that one yet. All right. Let's end it here. We have 6:30. Yeah. And somebody texting me here. I don't know who it is. Huh? Oh, somebody sent me a playlist for the eclipse, and somebody's going to be the dark side solar eclipse. Maybe, I don't know if they're live streaming the eclipse or not, but I got a playlist for it. I don't know any of the songs. Okay, I'm out. I'm gonna hit end on this one now. Ciao.